Welcome back to Investing Talk podcast. Today, we're taking a close look at a company that's generating quite a bit of buzz in the uranium sector, Denison Mines Corp. We'll be breaking down their upcoming earnings report, what analysts are expecting, and what to watch for that could truly move the stock. Now, before we get into all the specifics, if you find this discussion helpful, please remember to subscribe, like, and leave a comment. Your support really helps us continue to bring you these kinds of analyses. And hey, if there's a specific company you'd like us to look into for a future episode, just let us know in the comments below. Oh, and if you want to buy us a coffee, there's a link for that too. Okay, so let's get straight to it. For this analysis, we've gathered some great insights into Denison Mines' pre-earnings situation. Can you walk us through the immediate rundown? Like, when can we expect this report, and what are the general expectations?
Yeah, okay. So Denison Mines is set to report earnings on August 7th, 2025. That'll be after the market closes. Now, looking at revenue, their most recent figures have been hovering around, say, $4 million. But what's interesting here is that there isn't a specific Wall Street consensus for the upcoming quarter's revenue widely listed. You see that sometimes with companies at this stage.
Right, still more in the development phase.
Exactly.
Yeah.
But analysts are anticipating an earnings per share, or EPS, of -0 to 1 ones. And just quickly, for anyone maybe less familiar, a negative EPS means they're operating at a loss per share right now. Pretty common for exploration companies.
Okay.
And no specific whisper number reported in the sources we looked at, and the company hasn't given explicit quantitative guidance for revenue or EPS this quarter.
Gotcha. So no explicit guidance, but we have that negative EPS consensus. How has Denison Mines typically, performed against these kinds of expectations in the past? Do they surprise often, or are they pretty consistent?
Well, looking at their history, Denison Mines has pretty consistently posted negative EPS, and generally they align quite closely with analyst estimates. Over the last 4 quarters, any EPS surprises have been minimal. We're talking like within a penny of consensus usually.
Okay.
So this pattern, it kind of suggests they tend to meet these low expectations rather than significantly beating or missing them.
That's really interesting. So given those minimal surprises, how has the stock price reacted right after their earnings reports? Is it usually a big swing or more of a shrug?
Yeah, shrug is maybe a good way to put it sometimes. Price reactions have generally been quite muted over the last 4 quarters. Typically, the stock moves within, say, a plus or minus 3% to 5% range the day after earnings. And sometimes, even those initial moves have faded. It really reflects how much the broader uranium commodity market influences the stock.
So the commodity price itself might be a bigger driver than the quarterly report.
Often, yes. It seems investors are perhaps looking more at the big picture for uranium and the company's long-term projects, rather than just these specific quarterly numbers.
So it sounds like investors might be looking beyond just the headline figures then. What about their key financial trends? What should we be keeping an eye on beyond EPS?
Right. That brings up their overall financial health. So as we mentioned, revenue for Denison Mines is still modest for the sector. That just reflects their current status heavy on exploration stage assets, not full production yet.
Makes sense.
Consequently, net income has remained negative. Recent reports showed a net loss around $43 million.
Yeah.
And operating costs are up because, well, they're investing heavily in developing new mining methods in their projects.
Okay, but is there a positive side to the financials?
Absolutely, and this is important. Their balance sheet remains remarkably robust. They've got about $618 million in assets, a strong quick ratio, meaning good ability to cover short-term debts, and really good liquidity.
So they have the cash to keep funding these projects.
Exactly. That financial strength is vital for a company like this, needing sustained capital for those long-term plans.
That robust balance sheet is definitely a key detail. What's been happening with Denison Mines more broadly during this past quarter, beyond just the numbers? Any big news or sector shifts?
Well, the main company development this quarter has really been the anticipation and the early-stage activity heating up at their McLean Lake mining project.
Ah, yes, McLean Lake. That's the big one, isn't it?
It is. It's expected to materially impact their future production. It's a huge potential catalyst. There haven't been like major new product launches, but they're clearly investing in innovation, particularly that ISR mining method and exploration.
In the sector itself, how's uranium looking?
The sector trends have actually improved quite significantly. Nuclear energy is getting a lot more attention globally. As part of the energy transition, concerns about climate change, need for stable power.
Energy security, too, I imagine.
Definitely. And from a macro perspective, we've seen a modest strengthening in uranium prices, and this continued focus on supply chain stability and resources, which helps companies like Denison.
That makes sense. The macro picture definitely seems supportive. Has this translated into any big analyst calls, like upgrades or downgrades ahead of this report?
Interestingly, no. No broad analyst upgrades or downgrades have been reported leading into this release. Sentiment seems, I'd say, cautiously optimistic. Analysts are mainly focused on that ramp up at McLean Lake. It's kind of a wait and see on the execution there.
Okay, so let's talk about what the market is doing right now for Denison Mines. How has the stock been behaving recently, and what are the important technical levels to watch?
Well, technically speaking, shares of Denison Mines actually rose about 4% on August 4th, just before this report.
Oh, interesting. Maybe some positioning ahead of the news.
Could be. Suggests maybe some heightened expectations or just traders getting set. Key price levels to watch. Well, support looks to be around the $1.40 mark. That's where buyers have stepped in before. And on the upside, resistance is around that $1.75 zone. That area has capped recent rallies.
Okay, $1.40 some support, $1.75 resistance. Got it. And what about the options market? What's it telling us about how big of a move it expects from Denison Mines after these earnings?
The options market. Always fascinating. Based on the at-the-money straddle pricing.
Which is basically a bet on a big move either way. Right?
Exactly. It's currently pricing in an implied volatility for a move of about plus or minus 7% to 9% after earnings.
7 to 9%. That's actually better than the historical moves you mentioned earlier, the 3 to 5%.
It is. It indicates the market anticipates a potentially larger swing this time around compared to recent history, maybe suggesting that traders see more potential for a surprise, possibly linked to those operational updates on McLean Lake we keep talking about.
Okay, let's try and bring it all together then. What are the potential scenarios for this earnings report? What would a bullish report look like, and what would signal a more bearish outcome?
Right. So what could really move the needle? A bullish case would probably involve what we call a beat and raise scenario. That means, topping the already low revenue and EPS estimates, sure, but crucially, delivering really positive operational updates.
On McLean Lake
Yeah.
specifically.
Updates on productivity, maybe better timelines, hitting milestones, that kind of thing. Also, any forward guidance hinting at a faster path to revenue or maybe news on partner offtake agreements, those would be viewed very favorably.
Okay, that makes sense for the bullish side. And on the flip side, what would trigger a negative reaction?
A bearish case would feature, well, deeper than expected losses, obviously. But probably more damaging would be any sign of further delays or significant issues at McLean Lake.
So project setbacks are the big fear.
Definitely. Or signals of higher costs without matching progress. Also, any kind of asset impairment or anything that weakens that strong balance sheet we talked about, that would be a negative too.
So it really, really sounds like beyond the headline numbers, the McLean Lake project is the single most important thing to watch here. Is that fair to say?
Absolutely. I think that's completely fair. Operational progress and the updated outlook for McLean Lake, that's the main driver for Denison Mines right now. Even more so than just the revenue and EPS figure.
The whole story kind of hinges on it.
To a large extent, yes. It's where that binary project risk comes in. Success adds huge potential value. Significant setbacks could really hurt.
That makes perfect sense. So thinking about all this, how would you sum up the overall leaning for this upcoming report? If you had to give it like a confidence score, 1 to 10, for a clear direction after earnings, what would it be?
Overall leaning, I'd have to say it remains neutral heading into this. On a confidence score, 1 to 10, for a clear direction post-earnings, I'd probably place it right in the middle, maybe a 5.
A 5 out of 10. So pretty uncertain.
Yeah. I mean, you have the positive sector tailwinds, the strong balance sheet, those are good things. But then you have the low earnings expectations, which means the bar isn't high to beat, coupled with that very real project risk around McLean Lake. It just tempers confidence in a clear move. The earnings themselves feel less like a catalyst than potentially significant news around the project or the broader sector that might come with the report. It's more about the story.
That's a very balanced perspective. Okay, so for our listeners who are maybe considering their strategy around this, what are some thoughts for both, say, risk-averse investors and maybe those more risk-tolerant?
Sure. For risk-averse investors, it might be wise just to wait for the post-earnings updates. While the stock moves have been muted historically, there's always volatility potential. Maybe consider ownership after you get confirmation of McLean Lake's progress, or at least a clearer path forward.
Let the dust settle a bit.
Exactly. For those more risk-tolerant, well, bet options straddle, or maybe a strangle might look attractive given that implied volatility suggests a bigger move is possible.
Betting on that volatility.
Right. But given the recent muted reactions historically, I'd say careful position sizing would be really important there. Don't bet the farm. Ultimately, though, for long-term investors, Denison Mines is largely a play on two things: uranium prices recovering further and the successful execution of McLean Lake. It's a bet on that future.
So for Denison Mines, it really is clear that while the numbers matter, the real story lies in their strategic projects and that whole broader energy landscape. It leaves us with an interesting thought, doesn't it? In today's resource markets, especially in a sector like uranium that's so tied to global energy policy, how much does successful project execution, actually building the mine rather than just the quarterly numbers, truly determine that long-term value? Something to think about. Well, thank you for joining us for this analysis. We hope this look at Denison Mines Core helps you stay well informed. We'll be back soon with another detailed breakdown. Until then, happy investing.